So if you're buying a trailer to make content, absolutely, that would be a write-off. So if you buy a travel trailer in cash, you're going to need some sort of receipt, because if you make a purchase, I don't know how much those cost, let's say $5,000, and you want to write any part of it off and you get audited, you need to have receipts for anything you write off and say that this was an expense I incurred to earn revenue for my business. Paying in cash is fine as long as there's a receipt attached to it. If there's no support, no backup for the transaction, and you do pay in cash, you don't have any proof of like where the money went and that it actually was for the trailer. So the cash part, you have to think about that a little bit. If you purchase the trailer and it is exclusively for content creation and you're not using it for personal uses at all, it would be considered a business expense, but likely it would be considered a fixed asset. It wouldn't be something that you would write off all in 1 year. You would amortize it over the life of the trailer, like the expected useful life of the trailer. You'd be able to expense a portion of the cost of the trailer every year, and it would be capitalized, and a portion of it would be amortized every year. I would use it to make a bulk amount of content. Does that mean that you're just going to use it once and then, then it's going to be a personal thing? Then in that case, it's not going to be used on an ongoing basis for business purposes and to help you earn revenue. So it's all dependent on what it's being used for, if it's just business or if there's personal use as well. Similar to any write-offs, you have to look into a lot of different factors. I do have a write-off guide. I have a whole bunch of digital products for entrepreneurs to help them learn about this stuff. My blog, there's a lot of free content on my website, but then I do have calculators for a home office write-off portions of things. It does all the calculations and you answer all these questions and it'll kind of tell you what you can actually write off. I think in this case that might be applicable to you, and I would just consider it a kind of an extension of your house. If that's the case, then you're going to use the same parameters you would use to assess how much of a home office you could write off. I do see sometimes content creators will buy something they want for themselves and then make a video with that thing in it and be like, oh, it's a write-off because I use it for content. And it's well, you did, but that you didn't need to have that thing in that content in order to make the revenue. And did you even make revenue off that content? You can't just say my life is my business, because you also use that stuff for personal as well. And you can't write off personal things and things you use for personal reasons against your business income. That's just people don't get to do that. Only businesses do, because capitalism.